Hello, everyone, and welcome back to the Canadian Real Estate Channel. As always, I'm your host, Matt McKeever. It's Wednesday night, 8 p.m. Eastern Standard Time, so we're doing another real estate roundtable. I'm really excited. We've got at least 4 more great guests for you guys. We'll see. There might be a 5th one join us as well, but reminder, every single week, I'm just posting on my Instagram, so if you're not following me on Instagram, follow me at MattMcKeever85. And literally, that's your opportunity to jump on here, hang out with your fellow real estate investors, share your thoughts, your opinions, your experiences. And yeah, I'm excited to jump into it. So let's get started. First person I'm going to bring up here is Nelda. Hey, Nelda, how are you doing?
I'm great. Thanks for having me on your show.
Awesome. Well, we're excited to have you here. And if you don't mind, just give a little bit of background context for your real estate investing journey and what you're doing these days with real estate.
Well, I started investing in my first property when I lived in Fort McMurray. Many years ago, about over 15 years ago. And I thought that I could do really well with an investment because I'd been a renter for many years. I'd also worked as a part-time leasing agent. But once you own a residential rental property, it's a business, and I didn't know anything about it. So I have subsequently bought more properties in Alberta and BC, and I also had a property management business because I wasn't happy with the way property management was going for me. So I have, that's been my background, is property management. And then I moved into helping people who own their own properties, own their own investments, and they want to self-manage. So to that end, that's what I do. I have resources on neldaschulte.com. I wrote a book called Canadian Landlord's Handbook, and it helps people with their do-it-yourself investments. So once you have the property, what do you do with it when you want to rent it out? That's awesome. Where I come in.
Yeah, that's absolutely great. And I know for me, it was always the most exciting part was getting the deal, figuring out how it's going to make money. It was the boring day-to-day operations that often, I think a lot of us, we end up, not fully maximizing the potential behind a property because we hire the wrong property manager. We slack off when it comes to self-managing with property management. So absolutely, Canadian real estate investors need more resources and just more access to information because I think a lot of people just assume I'm a good person. My tenant will be a good person. We'll be able to figure things out.
Everybody says that. It's so true. But if you don't have a good tenant, you're not making any money on your property. So yes, all the good person stuff is great. But my adage has always been, believe in Allah, but tie up your camel.
Yeah, it's absolutely important to get things in writing whenever it comes to all that stuff. Next, we're going to bring up Ron. Hey, Ron, how are you doing?
Hey, Matt, I'm good. Thanks. How are you doing?
Doing well. And so if you don't mind, give everyone a little bit of perspective on how you're connected to the real estate world.
Yeah, 100%. So I've been investing in real estate for a couple of years now. I've been very fortunate in the business world. I've been investing, and I wrote a bunch of software to help me automate the process by basically looking at everything that was available on MLS, private Facebook groups, public Facebook groups, Craigslist, Kijiji, you name it, and basically running a bunch of financial models. And then I thought a lot from my friends came to me. They said, hey, I want to invest with you. And so I built a company that allows people to invest in holding corporations that own these large commercial residential properties. They get a share of dividends, capital gains when the properties are sold, and it allows them to invest as little as $1, and we manage it for them.
Interesting. Awesome. Well, appreciate you joining us here. Next, we've got Ali. Hey, Ali, how are you doing? Oh, and you're muted right now.
Hi, Matt. I'm doing great. How about you?
Doing well. And so if you don't mind, just give everyone a little bit of perspective on your background with real estate.
Yeah, so by profession, I'm a mortgage broker. We do private lendings. We do deals for our clients, residential, whether it's investors, first-time home buyers, newcomers, all good things. Especially we also work with investors. We deal a lot of private deals too here in London, Ontario, and Windsor area, Chatham area. We also have brokers in Chatham that we are working in our team. I've also been doing some work with the tenants too. So we know very well about tenants and investors and mortgage industry overall.
Awesome. Well, appreciate you joining us, Ali.
Yeah,
next,
thank you.
We've got Saman. Hey, Saman, how are you doing?
Hey, Matt. Thanks for having me on. My name is Saman Habibi, everyone. I am a realtor in the Durham region. Started off as a CPA, didn't enjoy that life, went into the real estate, and now I'm a full-time realtor. in the Durham region, working mainly with investors. 90% of my business is working with investors. We identify what they should buy, essentially approached by a numbers analysis, and then we help them throughout the whole process from buying to placing tenants to managing tenants. And we also try and educate them as much as possible. So whether they're buying a turnkey property, what they need to do to make sure they have a successful career, or buying a property that needs an uplift or a renovation project, guiding them through that process as well.
Awesome. And great having you back on the channel. And
Thank
so
you.
last but not least, I think we've got Yawar. Are you there, Yawar?
Hey, Matt, how's it going?
Good. Are you able to turn on your camera?
You know what? I am just driving, so that's why I had it off. It is hands-free. Is that okay, or did you guys want me to turn it on?
No, we'll roll with that. If you don't mind, give a little bit of perspective on your real estate experience.
Definitely. So just like Simon, I am a realtor myself, but just a little different. We do specialize in pre-construction here in the GTA, mainly the West End, anywhere from the Peel region going all the way down to Niagara Falls. I used to live in the GTA, but I currently moved to Niagara Falls, and we're basically we work with many developers and builders, and we do sell pre-construction for them when they do release. So that's a little bit of background on my end.
Awesome. Appreciate it. And so for anyone that's watching this now, if you guys are enjoying this, smash the like button, hit subscribe, all that good stuff. But jump in the comments, hit us up with your questions. We've got a great panel of real estate investors and different professionals here. So again, that's what this show is all about, really. It's just having two-way conversations with the viewers of the Canadian Real Estate Channel. So if you have any questions, jump in there. But first thing, I want to start off with just a couple of headlines here recently in relation to the Canadian real estate market. So let's start off with, actually, I'm going to start off with this article from RBC because I found it kind of interesting. They've came out with their monthly housing market update, beginning of the end for Canada's housing market downturn. Now, I personally think that that's probably a pretty load-bearing question mark they've got there. I'm not sure if we've really seen the end of the downturn, but what they're highlighting here is first resales increase in 8 months. So home resales rose a slight 1.3% month over month in October across Canada to 424,600 units, seasonally adjusted and annualized. This potentially signals market activity is nearing a bottom after sliding 36% over the previous 7 months. And essentially, I just thought this would be a great low jumping off point to ask our panel, what are you guys personally experiencing? What are you seeing and hearing from real estate investors in your market? So let's start off with Nelda. What's it like out there in Calgary?
Well, the market's definitely slowed down after COVID. The COVID scare stopped, and I've known a number of people who they're very reticent to invest in properties because of the increased mortgages, and also people are having trouble selling. So it seems to be sort of a two-way street. That said, you can always find good deals. There are always people who are buying houses, and there are always people who are selling houses. So I think you can take a look at the scare tactics and get scared off. But I think if you're looking for a good deal, you'll find a good deal.
Awesome. Appreciate your experience with what's going on in Calgary. Ron, what are you currently seeing? And are you also actively investing right now, looking for any more properties?
I'm focusing full time on like the commercial residential space. So we currently have a deal that we have our eyes on, which is like 100-unit property out in Manitoba. Very interesting space because they have a dedicated workforce that always needs housing in this particular area. And so if you can get a good deal on both the property and the mortgage, because these days that's very hard to do, you should be able to hopefully cash flow. And that's what I like about these types of properties is because they have so many doors, they're not quite as prone to vacancy and some of these other problems if they're managed properly. And so I still think that you can still find good deals out there, like Nelda said, and that smart money is still out there buying deals.
Appreciate that, Ron. Ali, what are you hearing from fellow real estate investors?
Yeah, I think the market has absolutely gone down since COVID, but we have currently deals going on, and I think it's reasonable to say for first-time home buyers and especially people who are not having more mindset of investing, for them, yes, it is a little bit, rates has increased and monthly payments are higher and mortgages are tough for them. But as if we see the statistics for investors, it is still reasonable for them, because if they are getting a good deal. If the house price used to be 700,000, now if they are getting the same house for 500,000, the mortgages make sense, and the numbers are even a little bit lower despite the rate increase. So I think it's a great time for investor to invest. It's the best time to leverage, get the deal done, survive for a year or two. Once the rate decreases, they have the equity, plus the rate is lower, and they have lower monthly payments going on. So I think it's the best time for investors to go into the market.
Appreciate that perspective. And I think, like a lot of things, it always comes down to really just understanding what your niche is, right? What your market looks like, and making sure the numbers work for the individual property that you're getting into. Saman, what's kind of your thought here? Have we seen the bottom of the real estate market? Do you think there's more pain in front of us?
Yeah, I don't think we've seen the bottom of the market. But with that said, we're experiencing almost 3 to 4 months of plateaued prices, mainly due to low levels of inventory. So inventory is very limited. So as a result, prices have stayed fairly stable. I'm speaking for the GTA, the Durham region. And I personally haven't really seen any deals out there. So when I look at what's happening in the market with interest rates increasing, and that having a huge impact on ROIs, essentially what I'm seeing right now is that anything that we're able to put on paper for our clients, ROI is anywhere between 3 to 5%. And the difficulty of selling that asset is that, why am I going to dump in so much money, 20% cash, to get 4 to 5% on a asset that is going into volatile times in the times ahead? With that said, when we normalize what interest rates should be, and we're looking at anywhere between 3 to 4%, the ROI does become a bit more attractive. So it depends on what their why is and why they're trying to get into the market and what they're trying to achieve. Some people who are high earners, who are making $200K a year, aren't necessarily concerned about making $200-300 a month in cash flow. But when they step back and just go back to fundamentals of investing, cash flow is a key part of that equation. So, I'm finding that, it is hard to sell people on a 4 to 5% ROI investment property based on today's economics, but some people are able to look past that. Unfortunately, some just aren't.
Yeah, really well said, Saman, and appreciate your insights there. Yawar, what's kind of your thoughts in regards to the GTA market? Have we seen the bottom? Do you think that there's more pain in front of us?
So again, I guess I'll touch base on the pre-con side, as you guys mainly are experts in resale. So yeah, we actually have investors that are looking for properties that are closing in 2024 or later. They are still investing. It's those clients that have money sitting in their bank and they're like, okay, listen, the stock market's gone down, crypto's gone down. Where can we put our money and at least put it to work, right? So that's how we sell them on pre-con. Obviously they have that staggered payment structure that they can get better deposits that you pay in 3 years, 2 years, sometimes one year, so they don't have to absorb today's interest rate. That's how we are selling the pre-con side of things. So yeah, that's basically what's happening on the pre-con side. Again, like you guys mentioned, people, they are still holding off and seeing if the market's going to bottom out. December 7th, they say there might be another rate hike. Let's see what happens. We were in a meeting yesterday with some economists. They did say they might possibly next year, they might increase the amortization from 25 and 30 to 35 and 40 years, and then they may remove the stress test. And obviously now, let's say 6% they can qualify at instead of 8%, right? So that might stimulate the market, but like we said, we can wait and watch, right?
Yeah, appreciate that insight. So I see we've got a question here from YouTube. I think this is a great one. I might just reframe it slightly for everyone, but for a first-time investor, what are some of the best markets for cash flow in Ontario? So those of you that are familiar with Ontario, feel free to throw out the market that you think is a good opportunity. But I'd also love to hear, just if you were starting over day one, but knew what you know now, what would that first deal that you'd be looking for? Or would you be waiting on the sidelines? Nelda, what's your thoughts?
Well, definitely areas that are outside of the main metropolis areas, because those are always the most expensive and that's where you have the least amount of inventory. But if that, lots of buts, because if you are able to manage that property on your own, and there's a bit of a distance involved, great. Or if you know a good property manager, great. So that would be the first place that I would look. Secondly, I would say, do you really want to invest in Ontario? Because right now it's very difficult for landlords. I read all the time, and I'm always posting these things in my Facebook groups about poor people who invest in properties and they lose their shirts because they got a bad tenant. They can't get rid of them. So the Ontario landlord tenant laws do not favor the landlords. They favor the tenants. So I would say think carefully about where you want to invest, because there are other places you can invest where it might be more like a blue chip savings as opposed to, a big stock market explosion. You might want to look in Alberta, you might want to look in Winnipeg, you might want to look in Saskatchewan, you might want to look outside of Ontario and just take a look at the big picture. Where is it favorable for tenants? Where are you comfortable investing? Where do you get the biggest bang for your buck? What kind of an investor do you want to be? There's so many ways to look at it that all these gentlemen have mentioned before too. Do you want new construction? Do you want to manage just a little bit like an apartment building? So anyway, I don't have a really firm answer about exactly where's the right place to invest, because it really depends on what your goals are, what you want to do, how much you want to manage it yourself, or how much you want to hand off to somebody else. But I would say consider all the factors very carefully before jumping into the arena.
Awesome. Yeah, appreciate that. Ron, if you were starting over, what would you be looking at?
Yeah, I mean, I think now they hit on a couple points there regarding like the tenant laws in Ontario are a little bit tenant favorable, and more than a little bit tenant favorable, and also that Ontario itself might not be the best province to invest in. But I would say in general, I would always look for cash flowing properties. More specifically, like I like triplex or quadplex or fiveplex if possible. The more units you can, the higher the density, the lower the operational overhead, because they're all close. If something breaks, you can get to them in multiple places. You can get to them a lot easier. I also like student rentals, because typically you get a lot of cash flow per bedroom. And so if you can get like a fiveplex in like Waterloo or London, those regions might still be good. Definitely outside the city of Toronto. I would probably look there.
Appreciate that, Ron. Ali.
Yeah, I think if we're looking just here in Ontario, currently I live in London, Ontario. So if we see back in couple of years, London, Ontario had a very reasonable price, but now it has bumped a lot. I think still Windsor is a very great option to invest in. The prices are fairly reasonable. Plus new businesses are going to grow in Windsor, which can bring more employees. If there are more employees, if there are more employments and work, tenants will also be able to pay the rents. I think personally, if I had the choice and start over, I would start with Windsor.
Appreciate that. Simon.
Yeah, so I mean, I think the question says as a first-time investor. So I know a few people have touched on, is it feasible to invest in Ontario? I'll be the first one to say that if the question is if you're a first-time investor, I would say you do want it to be somewhat in your quote-unquote neighborhood, because unfortunately, I don't think a first-time investor is going to be able to handle the difficulties of dealing with a leak, a phone call, or a plumbing issue that you get at 2:30 in the morning about a basement that's flooding and that you need to fix. Unfortunately, I think that these problems do arise, and you need to be able to, in my opinion, be able to drive to the property, whether that's a half an hour drive or whether that's a 2-3 hour drive. In my opinion, it's a lot more feasible than it's a lot more feasible doing that in an area that you're close by versus another province. Some other points in terms of cash flow, I think cash flow positive is going to be key in secondary markets. So being in the East End, and say that we have Peterborough, we have Belleville, we have Kingston, and then going west, Kitchener-Waterloo is a good area to be investing in. A big no-no for me would be single-family house or a pre-con in this market. I just think you're very limited in terms of what you can generate in terms of rental income. So to Ron's point, the higher density, the best. Realistically, depends on how much cash you have on hand, but the duplexes have been really great because of the ability to qualify for financing. But besides that, I would say, if I was to start all over again, I would probably, for me, what was the most feasible was the duplexes. They seem to be very easy to get into, qualify fairly simply, and then if you do have to cash out, it's a very high demand asset that you can sell.
Yeah, appreciate that. And I definitely understand where you're coming from in regards to wanting to invest locally, right? Or somewhere that you're mildly familiar with. I think for a lot of first-time investors, the idea of investing out of province can be quite intimidating. Although once you start to get used to real estate, I do see a lot of investors quickly acclimate to that, and then they get comfortable and they're willing to branch out. Personally, I love the idea of a duplex, right, or a multifamily, particularly if you're house hacking. I think that's one of the paths of least resistance for a lot of investors. Again, there's obvious certain headaches that come along with literally living in one of your units beside a tenant. It's not necessarily for everyone, but if you've got a certain level of personal commitment, right? If you're very serious about growing your portfolio, I think that there's a lot of great hands-on experience that you can take away from that, and then hopefully continue to scale your portfolio as you see fit. But Yawar, what's kind of your thoughts? If you were starting over day one as a real estate investor, what would you be looking for?
Again, it's fairly what everybody above said. Obviously, duplexes, fourplexes, multifamily homes is what I would personally go for. But then it comes. It's like everybody says, case to case scenario. Are you looking for cash flow or are you looking for appreciation? There are some markets where you can get a little bit of both, and you would have to obviously go digging and searching. And you can get those. So yeah, personally, if I were to start all over again, yes, go for the duplex. But at the same time, I do want that appreciation because there are certain markets where you don't get too much appreciation. You will get the cash flow. And then touching some points previously mentioned, how many homes or properties can you handle? It does get intimidating at a point where your tenants don't pay, you're backlogged, and some of you mentioned earlier, it's Ontario favors the tenants more than landlords. So yes, like our investors, we have a little bit of both. We have the appreciation, the ones that look for appreciation, and then a little bit of the cash flow ones as well.
Awesome. Appreciate that. And I see we've got a question here from David V. Curious to know what a property manager is charging percentage wise in everyone's location. So obviously only if you guys are familiar, jump in here. But if I see any mics unmute, we'll go to you. So Nelda, what are you currently seeing?
Well, it could be anywhere from 8 to 18%, depending on whether or not your property is furnished. So yeah, and there's a little bit of wiggle room in there. There's a little bit of negotiation that you can do if you have a property management company who's willing to negotiate with you. But that's pretty much the standard. And the reason that 18% is the top at the end of this for furnished is because it's a lot more hassle to manage a furnished property, because you've got to, when you're doing a move in, move out inspection, you've got a mega inventory list you have to go through, check all the pictures on the walls and the sofas, and you have to check the condition of everything. So there are a lot of property managers who don't want to take furnished properties simply because of that. So that's why they charge a little bit more. That's on the 18%. Or if you have a multi-million-dollar property, sometimes they charge a little bit more for that as well.
Awesome. Appreciate that. Simon.
Yeah, on a typical bungalow in the Durham region, it's anywhere between 5 to 8%. 8% if you have one or two properties, but the more units you have more negotiating leverage. So I've seen clients with 8 to 10 units going down to 5 to 6%.
Awesome. Appreciate that. And I guess one question for both of you guys in regards to that: would you expect that that percentage to also include them finding you a new tenant, or would that be a separate sort of engagement where you have to pay?
Well, there are all kinds of different contracts that you can sign with property managers. And the way that when I had a property management company, my husband and I ran it together, we didn't charge anybody until we put somebody into the property. And that's the best way to go, because what's the incentive? If somebody's getting paid a monthly fee every month, regardless of whether or not you've got somebody in the property, what's their incentive for putting somebody in there and to hurry up to find somebody, to put somebody in there and somebody good who's going to pay the rent if they're getting paid anyway. So I would say check your property management contract very carefully and take a look at all of the clauses and the conditions and make sure that you're not paying them anything until they put somebody in the property.
Got it. Simon?
It's typically a 1 month's rent in addition to the monthly percentage that they charge.
Got it. Anyone else want to jump in here in regards to what to kind of expect in your area of investing when it comes to property management fees? Ron?
Yeah, I've seen somewhere in the 5 to 8% range. I would say that sounds about right. I certainly personally wouldn't pay 18%, but maybe if it comes furnished.
Well, and I guess I obviously am not really aggressively actively investing in real estate these days. I probably would have guessed somewhere in the 5 to 10% range. But again, if you do get into short-term rentals, which are furnished, oftentimes you will see it drift above that 10%. And there certainly are like Airbnb management companies that will often get into the teens that I've seen. And then I don't know what inflation's done to property management over the last couple of years either. But I see David, who originally asked, he just shared 10% plus GHT in Fort Mac, not furnished, is what he's currently paying. So again, that sounds like Alberta maybe just happens to be a little bit higher when it comes to property management. Kind of funny seeing how it seems like property management should be easier in Alberta with more landlord-friendly laws. But the next story here I want to share with you guys and get everyone's perspective on. This is from CBC News. Average house price down by more than 170,000 since February. Prices down by 10% since last year and by 20% since the peak in February. And so obviously one of the things that we're constantly seeing here on this channel is people asking a question around, how do you know when it's the bottom? And do you need to time it in regards to actually getting in on the bottom, I think is often the follow-up question that I want to throw out there. So let's maybe jump over to Ali first. Ali, what's your thoughts when it comes to trying to understand what's going on in your market? Are you looking at volume of sales? Are you just looking at where prices are trending, where rents are?
Well, overall, it's all about ROI. So it's upon investor how much they have in hand, how much they have down payment, how much they are looking for a house, and how much they are going to leverage. Because if they don't get a good deal, then they have to go to B lenders or private lenders, and in that case, they cannot manage their cash flow, which can cause issues down the road. So it's all depends on the investor, how much leverage they are, how much debt service ratio they can afford. And currently in our market right now, we're looking the price is a little bit lower than usual. It is. It's good actually for investors who are especially new investors, because most of the investor who has not started yet investing, they have still cash or maybe some kind of funds with them that they want to get started. 100% they can start, and if they are too worried with the mortgage rates and everything, we can have a talk about that. Because if we see the past history of let's say 10-15 years mortgage rates, it has been up and down, and the prices has gone up and gone down. So it's all about knowing your own numbers and working through it. And most of the people are buying very low prices. They're trying to get a mortgage, even it's a little bit higher rate. So what they do is they survive, let's say maybe for a year or two. Even if it's not giving a positive cash flow, they just put some money out of their own pocket. When they survive a year or 2 years, when the interest rate goes down, then because they bought the house a little bit cheaper, now they have a little bit equity in the house, they refinance the home, and they pull out cash, whether they buy another house or even pay off the old investors. So I think that's also a very great option for new investors. Get your hands in because the market is good. The prices are low. Survive for a year or two, and then the rates will be better, and the house prices might probably go up. then you can play around with your numbers. You can either refinance, you can switch, you can transfer, you can do anything with your mortgages.
Got it. I appreciate your
Thank
insights.
you.
Yawar, I'm kind of curious to hear with pre-construction, is there the same sort of pressures on pricing, particularly when you're often looking out several years? Are you seeing builders try and incentivize certain things, or is it still very competitive with a lot of projects selling out quickly?
Yeah, no, great question. So builders, they are offering many more incentives now to us realtors to get their product moving. It's funny you asked that. Today there was a project called Zen Towns, and they're offering us a Rolex for every 2 units we sell. So so it's kind of you could tell they're a little they're really trying very hard to get their units moving. There's the smaller builders, unfortunately, they can't afford to lower their prices because they purchased land, let's say 5 years ago or X amount of years ago, and they don't have that much capital, so they have to sell at a certain price point. But the reputable, I would say, more experienced builders, or the ones that have been in the game for a long time, like Rosehaven, Mattamy, Empire, they've bought up land 10, 15 years ago. So we've seen those builders actually adjust their pricing according to the market, but it's still, pre-con is obviously still a bit more expensive than resale. But you are buying into the future. Builders do understand that. 5 years ago, pre-con was actually a little cheaper than resale. Then it caught up. It was actually very similar. Now pre-con is a bit more expensive, but again, it is a little bit of speculating if you are purchasing in certain markets and from certain builders. But there are certain builders that are still offering pre-con at a good price, and it's worth investing. But yeah, that's basically my insight.
Got it. Appreciate it. Does anyone else want to jump in just in regards to, how important is it trying to time the market right now in regards to hitting the bottom? Saman?
Yeah, I mean, I think it's fairly difficult to try and time the bottom. We look at some respectable names in the mortgage industry continuously calling, the market to crash. And this conversation has been going on for, 4 or 5 years, and they haven't seemed to time it right. You look at economists in the last 2-3 years, everyone's talking about it, bubble, bubble, bubble. The conversation of the bubble has been around for 3-4 years. They weren't able to get it right in the last 3-4 years. Finally, something has happened. I find when it comes to trying to figure out the bottom, people talk about supply and demand. And, there's a lot of arguments for either or, but I think, it's extremely relevant right now to say that the only thing that really matters right now is interest rates and how interest rates are moving. They've been moving up, and is it coming to an end? I don't know. CPI numbers came out today, and they were very close to expectation. Unfortunately, I think there's going to be perhaps another interest rate announcement, maybe not as big as some people thought. But what happens in the future in 2023, I'm not really sure. In terms of trying to time the market, I would say, I think it all comes down to, if you're an investor, it all comes down to ROI and running very conservative numbers, which includes 0% appreciation and maybe even a minus 1 or 2% appreciation factor into the future years, and see if that really makes sense for you. If you're only making a deal make sense because of a 5% appreciation, then perhaps you're working backwards and you're just plugging the number to make it work. But I'd say if a deal makes sense for you today and you can run it at 3 to 4% and the ROI makes sense for you, then to Ali's point, if you can survive 1 or 2 years, then perhaps go into it. But if you can't, then don't bother. And I think that's my best take on trying to bottom it, catch the bottom. I don't think you can. So buy if the deal makes sense for you. If not, sit on your cash.
Appreciate that. Ron?
Yeah, I think I have 2 high-level ways to look at this. I think the first one is the general perspective that from the day you have a house and the day that you close on the deal, there can be 90, 180, or maybe even a year passes. And so the rates can change, which is why it's so hard to time it. And I think the second way to look at it is mathematically, the more that you put down towards the principal and the bigger the down payment, the less you're impacted by this. And so the point is, like, yes, you can refinance down the road, but also if you put down, for example, 40%, then the fact that the rate is higher doesn't actually hurt you quite as much. And if you look at it mathematically, and I'm happy to do the model with anybody who's curious, the impact on you is probably no more than like 1% compared to it being a 4% market. And so at the end of the day, the impact to your bottom line based on the leverage amount and how much you can put down towards the principal, the more you put down, the cheaper it is. And then you can refinance in 1 or 2 years, as other people have recommended.
Appreciate that thought, Ron. And I guess the one thing that probably a lot of investors would think about when it comes to putting down bigger deposits is maybe just opportunity cost, right? The idea like, oh, I could have bought 2 properties instead of buying the one with 40% versus 20%. But Simon, did you have something you want to add?
Yeah, I was just gonna ask Ron's. So yeah, I agree that putting more cash down makes the numbers work, but when you then look at on a cash on cash return, is it a good deal, especially when you can? I don't know what the cash on cash would be on a typical deal where you're putting 40%. Can you even beat a GIC in the market right now? So like, at what point do you say it's not worth putting down 40-50% just to make it work?
Agreed. I think it definitely changes deal to deal. I think it's hard to say in general, but I did see an interesting statistic that for every $100,000 that you have out, every 1 basis point or 100 basis point increase, so 1% increase to the prime rate, is about $2,500 a month in terms of your costs. And so that can scale very, very quickly for people.
Mm-hmm.
All right. Well, I see we've got a question here from Jeremy that I want to throw out to everyone. Where could you find duplexes? Do you search online or try to find an off market? And so I'd like to actually just expand that and ask you, where do you guys turn for opportunities for your next investment deal? And quickly before we do that, Jeremy, just my thoughts. If you're specifically looking for duplexes, obviously you can go to MLS, right? You can go to the MLS, search there. You can actually filter for duplexes. One thing I will say is probably some of the best opportunities when it comes to duplexes might be miscategorized by the realtors. So don't necessarily solely rely on that filter, or you might overlook some opportunities. But one other thing you can literally do if you're looking to invest local is like walk your neighborhood, right? And any property you see with 2 mailboxes, good chance that that's a duplex, right? And so again, there can be opportunities to find off-market deals. Also, a lot of realtors will have particularly realtors that deal with investment, real estate investors will have actually like pocket listings. They'll know of landlords that maybe would consider selling their property, but for whatever reason haven't decided to list it. So again, don't be afraid to ask. I think the number one thing at play here when it comes to finding deals is just making sure that everyone knows that you're in the market to find an opportunity. But let's start with Nelda. Where would you start if you were looking for an opportunity or a deal?
Well, because I had a property management business, I knew people who were motivated sellers. So
Yeah.
I would say align yourself with a couple property management companies and say, look, who's got tenants and they don't want to be in the business anymore, who wants to get out? And that's a good place to start. And then they might even know some realtors who have pocket deals as well. So that's my 2 cents on that one.
Yeah, and I would even go a little step further and say like that's actually like, high level pro tip in my opinion. Reaching out to property managers, that really exponentially increased our ability to find off market deals once we started very proactively networking with property managers. Another one can even be like, if you're looking for like larger multifamilies, is laundry coin operated mechanics. Like again, whoever is going to be often seeing these properties, as Nelda was saying, they're going to be a great pipeline of opportunities. And again, if you can get to the deal before it gets to the market, oftentimes you're going to find a better deal. Doesn't necessarily mean you're guaranteed to get a better price, but if not a better price, you can maybe get more creative with the terms of the deal.
Yeah. The other thing that I've seen people do is they go through rental listings and they see which ones, if you're looking for a duplex, which ones are not renting, which ones have been on the market a long time. And then they contact those people and say, would you be interested in selling? And if you would, could we maybe work something out? So I've known a lot of people who've done that as well.
Awesome. Who else wants to jump in here and share where they'd kind of turn to if they were looking for a deal? Simon?
Yeah, I was just gonna say those are very good points. Just on realtor.ca, of course, another way to check it out. To Matt's point, they do often get misclassified. I would say more so now than ever. But search for two kitchens, and then afterwards, what you can do is any listings that come up, call the agent and ask if it's actually registered with the city to know if it's a legal dwelling or not. Some cities have a list of all the duplexes that are registered, and I know that Ontario is trying to move to more of a licensing legislation where you have to register your duplex with the municipality. And then, yeah, in terms of off markets, there's a lot of Facebook groups. So literally search your town name and then off market, and there's probably a group for it. And oftentimes people will list it there as well. But lastly, yeah, just try and work with an investor realtor if you can, and they'll be able to guide you fairly well.
Awesome. Yeah, great advice there. Ron, any thoughts that you want to add?
I think they hit on the high notes. I think obviously anybody in your network, like you said, if everybody knows that you're looking to buy, they're going to be pushing deals your way. Then it's sort of your job to filter out the good ones from the bad ones. I also think another great way, one thing we haven't really talked about, is looking at properties that you can potentially redevelop, especially with like the new laws regarding properties that aren't having any additional like changes done to the outside can be built in as duplexes now, and at least in the city of Toronto, maybe all of Ontario. And there's been lots of recent changes. And so I think if you can be smart about your investment and find a value add outside of just like, hey, this isn't a duplex today, but maybe you really quickly can make one. That's another great way to find these types of properties.
Yeah, absolutely agree with that. All right. Well, I think this would be a great time to maybe just jump in, and I'd love to hear general advice right now for real estate investors, people looking to acquire another property, because I find there's a lot of people that I guess there's so many conflicting narratives these days, right? As we even shared here, some headlines are highlighting the fact that properties are $170,000 below their average price since February. Other people are pointing out the fact that it seems like maybe we're starting to see the bottom. There's hints that interest rates could continue to rise. And I think that what that ends up creating is just a lot of chaos for the average real estate buyer. So, Yawar, what's kind of your thoughts? What would be your advice for someone right now that finds themselves sitting on the sidelines because they're just confused, they're nervous, whatever it may happen to be?
Well, from both perspectives, resale and pre-con, I can give is in terms of the resale side, like you guys already mentioned, it's consumer confidence. We need to instill that confidence and obviously hold their hand and move forward in their purchase, and just let them know that, like everybody mentioned, there's that saying in the mortgage industry, you marry the interest rate. Sorry, you marry the house, but you date the interest rate, right? So I think that's a good phrase to, I guess, remind some clients that, hey, listen, just don't worry. It's the storm's going to weather, and interest rates will eventually come down. But take advantage of the lower pricing today. And then when it comes to pre-con, again, we tell them that, listen, you're closing to. If we do recommend our investor clients buy something that's closing 2 or 3 years later down the road, obviously in this market, and then have their money work for them instead of sitting in the bank, right?
Awesome. Appreciate that. Ali, what are you telling clients these days when they're coming to you for mortgages? Because again, I think there's a lot of people constantly debating, should I go fixed? Should I go variable? Do I get a short-term fixed?
Well, yeah, I think whenever clients come to us, mostly we are more into the mindset. It all depends on the mindset. If a person has a really investor type mindset, if they are really dedicated to go for it, then yeah, 100% they can go. And down the road, they have to know their numbers. They have to know the potential risks. Every opportunity has its own risk. We cannot say that, well, there's opportunity and it has zero risk. That does not make sense at all. Every time in every market, whenever there's opportunity, there's always a risk. We can never say that, well, I want an opportunity without a risk. That's not going to happen. If someone really needs to take on opportunity, they need to know the risks too and prepare for the risk. Let's say if they wanna have an opportunity, whether it's just a duplex, triplex, or if they want to build an empire, they should know their risk and they should prepare before going into that risk. Let's say if an investor is just starting new, they should know that, well, if the interest rate right now is at that prime, it can go higher, it can go lower. and they might lose or they might gain. That's the thing. But most of the time, we always advise our investor, whenever you can afford, that's the right time. Because when you know your numbers and when you can afford, that's the right time. When you keep the money forever, like 5, 10 years, inflation is going to beat that money. Inflation is increasing every year. And if you know your numbers, if you are well educated, you know what you are going to do, you know your potential risks, you know how to manage that risk, go for it. Even if the risks are a little bit higher, it still makes sense to invest rather than waiting 5 more years or 2 more years, and then you never know what the market will have a shift on, right? So it's all about the mindset of the investor. And if it's about mortgages, if they want to go fixed or variable, it all depends on them, on their strategies. So they should, before investing, they should know their exit plan too. If they are going, let's say they are too much leverage and they want to go with private lender, they should know that how they are going to exit their private lender, whether they can afford the money within a year. They can go for 1 year term. If they think that, well, the property equity is not going to increase within a year or 2 years or 3 years, then they can go for longer term. It all depends on what they think and what the market will turn around. So yeah, I think we always say whatever they think, every opportunity has its risks. Know your risk, and take on opportunity. If the interest is low or high, there is always risks. There is, for sure.
Yeah, appreciate that. And obviously, for everyone at home wondering, it turns out there's no one size fits all answer when it comes to your mortgage. It really does come down to making sure it's in alignment with your underlying goals, right? As an investor. Nelda, what's kind of your general advice for people that are confused right now in this market?
Every market's confusing. I'm just thinking about when I first moved to Fort McMurray many years ago. I live in Calgary right now, but at the time, people were saying the housing prices were going crazy, and the house that I ended up buying was listed at $345,000, which seemed like an exorbitant amount of money. When I bought it, I remember my brother, who's a doctor, saying to me, "Did you buy waterfront property in BC? Like, holy cow, that's a terrible price." Then the 8 years that I was there, the price went up to $600,000. And then when I left, of course, we had fires and floods and 2 recessions and the pandemic, and everything dropped. And now it's like worth 320,000. So, I mean, the markets are always going up and down, up and down, up and down. So I kind of like what Ellie was saying. It's like, you can't look into your crystal ball, but you can look at yourself and you can look at your own finances and you can say, what can I afford? And what do I want my investment to do for me? And then kind of go backwards. So that's my advice.
Appreciate that. Simon.
Yeah, I mean, I don't think people are going to like my response, but I think that, we've been conditioned in Canada to believe that interest rates will always come down and asset prices will always go up, and that real estate is a hedge against inflation. Previously it's worked out fairly well because the market has always gone up, but I think, if there's perhaps an opportunity for history not to repeat itself, it could be now. You could say that it could be now because real estate has not been a hedge against inflation. Waiting has benefited you. Interest rates aren't going down. So, I mean, I think it all comes down to what you're trying to achieve, understanding your why. Are you on the residential side? Are you on the commercial side? Are you looking to do a refi or are you not? All these things have a big impact on what you're trying to achieve. Unfortunately, I don't think I can give a blanket answer as to what I think is going to happen. I think it's very dependent on every person's situation. I'll just leave it there.
Awesome. Yeah, appreciate that. And Ron?
To be honest, I think everything that's been said has been pretty true. I don't know how much value I can add on this specific topic.
All right. Well, again, appreciate the honesty there, Ron. So again, appreciate everyone joining us for this episode of the Real Estate Roundtable. If you guys enjoyed it, smash the like button, hit subscribe if you're new to the channel. Reminder, we go live every Wednesday at 8 p.m. Eastern Standard Time. Real quick, I just see Obegom jumped in here. Question, RFA offered me prime minus 110% on a 380K mortgage. I want to refinance for nearly $500,000 and will need HELOC, but RFA doesn't offer HELOC. If I switch my mortgage, I won't get the same rate. And if anyone wants to jump in here and answer, feel free to, but I'm happy to cover this as well. So I guess the first thing I would focus on is sometimes people get caught up trying to chase interest rates. And that's certainly when I first began as a real estate investor. We were constantly bragging about how low we got our interest rates. And I can remember, I think the second or third mortgage we got was prime minus 1.45. And at that point in time, interest rates were already really low. I think it was like 1.85 is what the mortgage actually worked out to be. And we're like, oh my God, this is the cheapest money we're ever going to see. We're geniuses, right? Like, I can't believe banks are giving money away at this rate. However, it worked out for us because we knew we were going to hold that property for 5 years. And so that was the term of that variable rate as well. And we felt very confident that regardless of what happened with interest rates, our cash flow was going to more than cover it. I think if it's really important for you to get a HELOC, understand that oftentimes products that aren't just like right off the shelf, with a HELOC, or again, if you want the HELOC to grow or increase over time as you pay down the principal, again, that can be a great value add for you. But understand, what's your primary goal here, right? With the mortgage, is it to get regular access to a revolving line of credit, in which case it's probably worth compromising on getting the ultimately lowest interest rate and instead get that HELOC. However, if you're literally just wanting to either flex on your friends because you got the lowest interest rate, or you're actually very, price conscious in regards to what that interest rate is going to cost you, then obviously you're going to want to chase after the lowest interest rate. So I think, again, if you can sit down and really focus on what's my ultimate goal here, why am I looking to refinance the property in the first place, hopefully that will give you a path of least resistance into figuring out what's actually right for you in your personal situation. All right. Well, again, I appreciate everyone joining us for this panel. Before we wrap up, I want to make sure everyone knows how to get in contact with you guys. So let's start off with Yawar. If people want to reach out to you, what's the best way to do so?
They can contact me at 647-403-5495, or my Instagram handle is my first and last name, Yawar_Anwar.
Awesome. Appreciate that. Saman? Oh,
Sorry,
there we go.
Yes. Best way to contact me is through my socials. It's Saman Habibi _real estate on Instagram, on Twitter, and on YouTube as well.
Awesome. Ali?
The best way to contact me is my phone number, 226-926-7521. Or if they want to go at mortgagesbydesign.org, they can find my full information there.
Awesome. Ron?
If people want to sign up or check out more about fractional real estate, they can check out fractionum.com. We have a contact form there. You can just email me, ron@fractionum.com, and we're happy to answer any questions.
Awesome. Appreciate that. And Nelda?
You can reach me through my website at www.neldaschulte.com, or you could reach me at nelda@neldaschulte.com.
Awesome.
Same as the name above my head.
Perfect. Great branding. And again, appreciate everyone joining us. We'll look forward to hanging out with you guys next week as well for another episode of the Real Estate Roundtable. Until then, I hope you guys are doing well. And reminder, don't panic, right? Obviously, this market's going to continue to evolve, but you as a real estate investor, you can continue to be dynamic. Focus on your numbers, focus on the details, and I think that the rest will take care of itself. One last thing that I want to share with you guys, if you didn't realize it, I actually do have a second YouTube channel where I post all the things that seem to piss off people that only want to see real estate content from me. So you can check it out here. It's Matt McKeever Unfiltered. You can find it on YouTube, on Rumble, everywhere else. And I recently just put out it's essentially a documentary about what went down with the Freedom Convoy. So if you guys are interested in learning more about that or understanding what 14 false narratives that you likely heard from the CBC. And if you want to see them dismantled, check that out. Again, it's Matt McKeever Unfiltered on YouTube. But regardless of what your political beliefs are, I hope you guys are focused on putting your financial future first, right? Build your financial independence, build that financial fortress of solitude, because I think that there's more volatility in the future. Who knows whether prices go up or down, interest rates go sideways, stay high, or come back down. Again, you can absolutely be in control of your financial future by focusing on what you can control. Appreciate you guys, and we'll see you next week.